Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to answer a question that a lot of people well, not a lot of people, but a question that was asked by a subscriber. But yeah, if you're new to the channel, welcome. This is where we deposit $100 a week into a tax-free savings account and build a dividend portfolio right in front of your eyes. If you're not new, welcome back. But like I said, every week we put in $100 a week, and I always show you some proof. So here's some proof right here. And then we'll just get right into it. But the topic of today is the question that was asked, and the topic that we'll probably talk about today is REITs. Would I consider REITs? What do I think about REITs? So we'll answer that after the update, because that's what we're mostly here for, I think, for the most part. But we're having a stellar week this week. We are up $37.47, up 3.37% for the day. For the week, we are up $113.82 at 11.01%. Awesome. 1 month, we are up $109.72, up 10.57%. For the 3 months, we are up $127.82 with a total capital appreciation of $12.53%. So we're up quite a bit, which is awesome. The market is just playing in our favor currently, which is totally awesome. So to give you a breakdown of the shares that we have 5 shares of BMO, which closed out today at $87.57. That is a 3.16% increase, closing today at $87.57. We have 5 shares of, BMO. Average price that we purchased this position at is $81.32, holding 38.71% of the portfolio. Today's return is $13.40, up 3.16%, and our total return from owning this position is $31.25, up 7.69%. The next holdings that we have is Bank of Nova Scotia, closing out at $61.35, doing fantastic with this one. We own 7 shares of Bank of Nova Scotia, total value of $429.45. Average price that we purchased at is $54.58. Holds 37.97% of the portfolio. Total return, today's return is $10.99. That is 2.63%. And our total return is $47.40. That's an increase of 12.41% since owning the position. The next share that we own, the next position we own, is Manulife Financial Corporation, an insurance company. Closing out today at $21.98, up 5.22% today. We own 12 shares of Manulife Financial Corporation, total value of $263.76. Our average price of buying each stock is $18.41. It holds 23.32% of the portfolio, and we will be increasing this position on Friday once the cash gets into the account. We'll be increasing this position as well, no matter the price, because dollar cost averaging plays a factor. And this one pays a great dividend, and I think there's still room for it to move up in capital appreciation. But today's return is $13.08, 5.22% today. A total return of $42.87. That's up 19.41%. Just phenomenal. So just record days, in my opinion. It's my opinion. We are just seeing a huge increase in the financial sector, because the financial sector has just been beaten down the past 6 months, and a lot of people, from what I've heard, are skeptical or have their opinions about the financial market here in Canada. But you got some faith in it, and it comes back, and you get the $127.82 growth at a 12.53%. And this is just the portfolio that we're building right in front of your eyes, to give you an idea of how easy it is to invest, but to see how fun it can be when you see these kind of increases in stock price, in gains, and everything like that. So the question that I got today from this subscriber is, would I ever, or will you consider REIT? Which I think he means, would I ever consider putting REITs in this portfolio? Would I consider purchasing positions in REITs? And if you don't know what a REIT is, REIT, it is Real Estate Investment Trust. So to give you an idea of what a REIT is literally what it is a company that owns a lot of property and collects rent. So whether it's commercial, residential, industrial, I believe as well. It is all owned by a company. So a great an example of a company here in Canada is RioCan, very popular amongst investors, and I think they do very, very well. But here's my take on REITs. So REITs for me, would I ever consider them? Maybe in the future, just not right now. Are REITs a good investment is a great question. If you're looking for a stream of income or a passive income, then yes, for sure. There are huge upsides, I guess, to owning REITs if you're not in a position to buy physical property. So to buy your own residential property, rent that out, because that's essentially what a REIT is. It's a lower cost of entry than buying, let's say, a $300,000 home or $350,000 home and renting it out for $1,200, $1,300, $1,400 a month, and you take that risk on yourself, right? When it comes to a REIT, it's literally everyone pooling their money together into this company, this trust, in which the company that owns these properties will pay you a monthly dividend. So for the most part, I do believe REITs pay on a monthly basis. I think there are some that pay on a quarterly basis. Now, it is a dividend income, yes, 100%. REITs are required to pay out, I believe it's 90% of all revenues, or yeah, I think it's 90% of revenues to shareholders or holders of that REIT. And that is probably my concern, because when I look at purchasing positions in companies, purchasing their stock, I look at sometimes, well, I look at all the time, but not sometimes. I look at how much are they paying out in dividends and how much are they keeping within revenue or net income to grow the actual business. And REITs are legally obliged to pay out 90% of their revenues to holders of that REIT. So that leaves them with 10%. 10% to grow. I don't know if that's a lot of dollar value. It probably is a lot of money. Percentage wise, it's not that much. So that means they leverage probably a lot of debt, which in most cases they do. And they either use it to pay down that debt or they use it to buy more property, which would increase hypothetically their dividend payouts. Now, these are great. I don't have anything against them or anything like that. I would consider them absolutely in the future. But right now, where I'm at in my life is I'm focused on purchasing positions in companies, in stock, not in REITs. It's not a high priority for me because, for me, a couple of years down the road or even in the near future here, I like the idea of actually owning the physical property, whether it's residential, commercial, industrial, and that is something I've wanted to do. And I'm not going to do it by myself. I'm going to do it with a group of people, and they're going to be my partners, and we're going to do it together. But if that's not something you want to do, because that's what it's comparable to, is then a REIT, yeah, absolutely, a REIT would be something that is probably for you. For me currently, no, it's not something I would want to purchase into. It's something I would consider, absolutely, if the numbers made sense. But with the low interest rates, they have the ability, yes, to pay down their debts and things like that. But it also poses the question of what happens when interest rates go up. And the argument that will come up is, but interest rates are at the all-time low, and they probably won't come back for a while. That is debatable. I think it was in 2018 or 2019, Bank of Canada increased interest rates literally in a second, like that, 0.25% one day, and then literally a week later they increased it again. And they have that ability. And sure, the economy is not where it's at, not where it's supposed to be. A lot of people will say, but what if it never, what if tomorrow something happens, like a black swan comes in, not a bad event, but like maybe a good event where the economy just somehow just returns. Obviously it's not going to happen, but I'm being really, optimistic, I guess. But, what happens when interest rates rise? It becomes a riskier investment. Now, on a scale of volatility, it's literally maybe a medium risk investment for a lot of people. And so would I consider it right now? No. In the future, maybe. But in the future, I'm looking at purchasing, rental property, investment property, where I can see it physically and I have control of it, right? I don't have to pay out 90% of revenues back out to people who own, part of the building. I don't want that. I want to create streams of income, and whatever myself and the partners decide, what are we going to do with the revenue this year? That's a better conversation. That's a conversation that I want to have with them is are we going to take that money? Are we going to reinvest it and pay down some debts to increase cash flow? Or are we going to take some revenues? Or are we going to go and expand and purchase more property? That's something that gets me excited. And so REITs are great for those that maybe don't want to put on the risk of owning the property themselves and want that passive income. It's different for everybody. And so REITs are REITs. That's my take on REITs, in my opinion. You may have a different opinion, and you have every right to that opinion. But that's my take on it. And so hopefully that adds some value. And if you guys did like the video, leave a like on the channel, on the video, because it does help the channel grow. We are past that 100 subscriber barrier. I think we're at 106 today, and it's just awesome. So thank you so much. And if like I said, if you're new to the channel, consider subscribing, leaving a like, commenting, whatever you want to comment, as long as it's relative to the topic. And remember, I'm not a financial advisor. I'm definitely not your financial advisor. So if you're out there trying to seek advice, please seek a professional and do your due diligence and research, because sometimes things that I do may not work out for you, and I wouldn't want that on. I wouldn't wish that on anybody, or I wouldn't want that for anybody to make these big mistakes because they took advice from a guy on YouTube. And so hopefully you guys did enjoy the video. We'll probably see you on Friday. You're probably wondering, why the heck is this guy wearing a turtleneck and a vest? It's snowing outside, it's cold. And so other than that, guys, hope you guys did enjoy the video, and we'll see you in the next one. Bye.